A very, very good afternoon to all of you. Usually when the precursor to these things is who wants to go back 25 years, etc., it's not uncommon that just a couple of hands kind of went up out there, because as the two of us were walking up as well, and we've been chatting a little bit, just some anecdotal conversations around the last few decades. But over the next 25, 30 minutes, I believe that we couldn't have had a better person to kind of just lay out these last 25 years, but more importantly than the next decade and many more. Hitesh Oberoi, Managing Director and CEO of InfoEdge. For those of you who you will know InfoEdge from its numerous brands like Naukri, Jeevan Sathi, 99 Acres. But let me, whenever there's going to be the annals of Indian digital history being chronicled, and if I was to be asked that, okay, name 3 companies which made an impact, as it were, I would certainly put one of them as InfoEdge. InfoEdge started off as this jobs portal, which we'll hear Hitesh talk about that, but just as a precursor and just to set the context for all of you here. It was arguably, I think, if I'm not mistaken, perhaps the first Indian internet company to go public in the Indian bourses. Today has an enterprise value of about 70,000 crores. Have been at the forefront of investing as well into numerous businesses. If you haven't used their job portal or got engaged through their matrimonial site, you certainly have been accustomed to one of their investments through which you probably order food all the time, which is Zomato. That single investment today has an enterprise value as a company of about 140, 150,000 crores. Another company of theirs, PB FinTech, which is Policy Bazaar, today at roughly about 50,000 crores of enterprise value. So when I was just looking at some of this, almost about what, 50, 60 billion dollars of entrepreneurial driven value creation that you all have been driven by, Hitesh, and my congratulations and fabulous. So let's start. Go back to when you got this call, or how did it start between Sanjeev and you? So tell us the InfoEdge story from 25 years back.
Look, back then, 25 years ago, nobody really understood the potential of the internet. There were no smartphones. There was maybe 2G, not even 3G. Modems. It used to take a minute or 2 to connect to the internet. Only desktops, cyber cafes. These are some of the things you recall when you think about the 90s. They were just, and there was no venture capital, by the way, in the early 90s. There was no concept of venture capital. And Sanjeev was running Naukri part-time because, we were trying to build a small business. He had a day job at the Pioneer newspaper. I was working at Hindustan Lever. I wanted to do something different. I'm about 10 years younger to him, and I knew him from earlier. So I actually, somebody approached me for another .com, which was going to start at that time. And since he was working at the Pioneer newspaper at that time, I went to him for advice. Okay, listen, I have this offer. This guy wants to start a .com. He wants me to join him. What do you think? And he was like, listen, if you're thinking of doing a .com, let's do another one together. Right? So we started another .com, actually, called Bachao.com. Bachao, which was supposed to be a discounts and deals kind of platform. And then, to cut a long story short, what happened was that suddenly there was venture capital available in India. And not only did venture capital become available, one of a new company started at that time, and they went on to raise $5 million. And they set up a job portal. And we were scared, right? And we were like, now we also need to take venture capital. We need to, work full time on Naukri. So we had to create a business plan. We went.
Luckily,
Luckily,
to
there was a
ICICI venture.
luckily there was a dot-com boom. There was an investment boom, and for a very short while, the window lasted only for 6 months, and there was inbound interest, and we were able to raise about $1.5 million, $1.7 million at that time at a decent valuation. But the VC told us, listen, you guys need to just focus on one business. So shut down everything else that you're doing, and everybody move into Naukri, and this is what we are funding, and you have to build Naukri. So that's how it all happened. And this was around 2000 May. We got money, and the money was supposed to come in tranches. We raised 7 crores because the dollar was 45, and it was supposed to come in 3 tranches of 3 plus 2 plus 2. And just as the first tranche came in, a week after that, there was a dot-com bust in the US. So there was a big dot-com bust in the US. A lot of companies had gone public. In that era, Yahoo, eBay, Amazon, etc. And there was a big rally on NASDAQ, and then there was a crash.
This is the Time Warner AOL merger and the crash thereafter.
Correct. This is 2000, maybe June, and all venture capital disappeared from India because there were just 2 million people on the internet.
Correct.
In India in 2000, there were just 2 million people, and they all disappeared. And a lot of the companies that raised money never actually were able to get the money in, and some of them actually raised money and spent it very foolishly, and ran out of money within 6 months. Luckily for us, we had submitted a very conservative business plan to ICICI, and they were an Indian VC. And we were able to meet that plan, and therefore we got the other tranches in. Because many people who got money in tranches, many companies did not even get the full money in at that time. So we were lucky we were able to get the tranches in. There was a point in time when we were losing 25 lakhs a month, and we had maybe 2.5 crores left in the bank, and there was no money available otherwise. But we just got lucky, we survived, and then of course, the rest is history.
No, rest is a little more than history. But so let me get this straight. So your initial funding was about 1.7 million or thereabouts.
7 crores.
Okay. But you also were, if I remember correctly, I think around 2002 or 3 or so, you had gone public as well.
No. We went public in 2006.
6, okay,
Yes,
6.
yes, yeah.
And that was not a time when companies could go public with
Correct.
a loss-making track record. So you had already, by then, sort of turned profitable.
Correct.
So walk us through a little bit of the journey then, and also try and correlate some of the other, what was the landscape at that point in time? Because this was probably the first phase of a UPA 1 coming in 2004 or thereabouts.
Yes.
Another form of energy as far as India was concerned. So what was happening, and how is it that you were able to take your business public at that time?
Yeah. So this was, 2000 to 2006, 2001 to 2006 was the age of Indian IT services companies. Because, Y2K, I don't know how many people here are familiar with Y2K. Y2K happened on the back of Y2K. Companies like Infosys, Wipro, TCS did really well. And these companies were growing at 30, 40% year on year. They were like the startups of today back then. And they were hiring a lot of people, and Naukri was built on the back of IT hiring in this country. But, by the way, when we raised money in 2000, there was no Google in India, right? So Google, the search engines which were popular at that time were Yahoo Search and Alta Vista and Lycos, you will recall, right? And then suddenly Google happened, and Google became this big company overnight. And, that gave us, and we were competing very aggressively with some MNCs which were in India at that time. So it was a very hot market even at that time. And we had companies like Monster USA, which was a big job board in those days. They were in 32 countries. They set up shop in India. They went on to acquire the other competitor, which had been funded.
What was that
Jobs Ahead.
Jobs
Ahead. They were funded Jobs. They went on to acquire Jobs Ahead, became very aggressive in India. There were Southeast Asian job boards like Jobs TB and Job Street. They set up shop in India. There was a European job board called Stepstone which set up shop. But after Google became this big company, search became very important. So search, till then, Yahoo was the big portal, and Yahoo was more like a browse platform. You just, go there, you click on a link, and so on. And when search became very important, it gave us ideas also. We launched a job search on Naukri. We launched a resume search on Naukri. And the resume search became very big for us and made the company profitable. And we went on to list on the Indian Stock Exchange in 2006. But when we went to list in India, nobody understood the internet. So we were told, listen, you will have to get overseas investors if you want the IPO to be successful, because Indian mutual funds, Indian FI, Indian domestic institutions are not going to invest in your IPO. Because when we went to meet them also, they said, आप तो IT company हो. तो आप तो अगर Infosys का multiple is 20, how can you get a multiple higher than Infosys? You are the new kid in the block. And the benchmark is Infosys, the benchmark is TCS. So you are an IT company as far as we are concerned. So only the investors overseas understood, what the internet was all about, the power of the internet, and how internet business models were different, and how internet companies have operating leverage, and stuff like that. And therefore, we had to aggressively market our IPO in Singapore, in Hong Kong, in USA, in London, and all these places. Luckily, we were profitable. So the IPO did really well. I mean, we got oversubscribed 55 times. We IPO'd at a market cap of 800 crores.
800, yeah.
800 crores. Yeah. And we got a big pop post-listing, so it went to 1,500. As luck would have it, and for many years we were growing at 70, 80, 100% year on year. And we were very profitable. And as luck would have it, within about a year and a quarter of us listing, we had Lehman, the global financial crisis in 2008. And all hiring came to a stop in the country for a few quarters. A company which was growing which was used to growing at 100% year on year for many years, we suddenly saw revenue contract 25% for 3 quarters. We went from plus 70, 80, 100% to minus 25% for 3 quarters. That was a killer time. And of course, our stock also crashed, post when that happened. But luckily, business came back in 3 quarters, and then there was a great recovery. But because we were profitable, we still kept making money because of the high operating leverage. And we had a 60% EBITDA margin, 50% EBITDA margin even back then. But because of this crash, because of Lehman, our competition got hit even harder. Because Monster was the big daddy in 32 countries, and America was hit the most, and so was Europe. And post 2010, once the market recovered, we started gaining share over Monster. Till then, it was very neck and neck. We were 45%, they were 40% of the market, and so on. But by 2012, we were like 70% of the market, and they had virtually sort of exit the country.
Fascinating. Yeah, if I were to relate this to, dollar rupee index at that time, 2006, 800 crores in today's time would be about $100 million, to now a $9 billion plus entity. And not just that, as I mentioned, having created an ecosystem, to me, I look at it that when I talk about InfoEdge, it's a little bit like, this entity which is this sage-like entity, and certainly your co-founder Sanjeev has that attribute as well. Almost like this sort of Buddha of a banyan tree, as it were. But they say that, not much grows beneath a banyan tree. And yet, you went on to, you've invested into as many as about 100 startups, you were saying, Hitesh. Talk us through that, because here you are a sort of young company, you've gone public, so there's a whole responsibility to the public markets. You've had global competition, which has gotten weeded out, given sort of the global headwinds of 2008, etc. But I'm sure it's not that those are the sort of resources that you still have, that you start thinking of. And whilst you're talking Naukri, you also had 2 other verticals inside. You had 99 Acres, you had Jeevan Sathi. So at what stage did you all even think about starting to invest into startups, and how did that journey happen?
So I'll tell you, once Naukri became profitable and started generating cash, we had 2 options. We did a strategy meeting. Strategy meeting meaning we met for 2 hours, right, internally, 2-3 people, and said, what should we do? So should we go international? That was one option. And the other option was, should we get into other categories within India? And we sort of thought about it for a while, and we were like, listen, we don't think we want to go international. None of us want to relocate from India. We would rather be in India. And India seems to have a lot of opportunity still. It's a small country, it's growing. And what Naukri had successfully done was basically moved job advertising from newspapers to the internet. So we felt we could do it in other categories as well. Real estate advertising was big in newspapers. Matrimonial advertising was big in newspapers. So we decided to basically diversify into other verticals in India. So we took that call and said, "Ab hum 99 acres karenge, Jeevan Sathi pe fight marenge." And so that's how it all started. Now, when Lehman happened, then we were a little shaken for the first time because, like I said, business contracted by 25% for 3 quarters. And again, we sort of slowed down our investments in some of the other verticals we have. But by 2010, we had made a very strong recovery. And we were churning out a lot of money, churning out a lot of cash. Naukri is a cash engine. It has a 60% EBITDA margin, generates a lot of cash. Even today, it generates about 250 to 300 crores a quarter of cash for the company. And we said, "Ab kya kare?" Because 99 acres and Jeevan Sathi were happening, but they were happening at their own pace. It was still pre-smartphone days, right? Still before, and internet access was still limited. Not everybody had access to a PC or a laptop. So internet was growing, but dheere dheere kar raha tha. So we had this thought, listen, just like somebody invested in us many years ago and put $1.5 million into us, which is now worth whatever, maybe we should start doing the same. There are so many opportunities. We can't build everything inside Info Edge. So let's find smart entrepreneurs who are willing to do this, and let's bet on them. And the original thinking actually was to be strategic, right? To be the only investor in these companies, to own more and more of these companies as these companies grew. And that's how we started looking around for companies to invest in. Luckily, our first 2 investments have worked out to be the best. Zomato and Policy Bazaar, both done in 2008. We were the first investors. Zomato was actually a restaurant review platform and rating platform. It was not a food delivery company. It was not even called Zomato. It was called Foodie Bay, and we invested. Right?
And I'm curious. So, what was the investment that you made at that time in Zomato and Policy Bazaar?
So Zomato, our first check was $1 million for 25% of the company.
There you go.
For 25% of the company. It's worth close to $20 billion today, the company.
I just saw 4 venture capitalists go like this right now.
And Policy Bazaar, I think, invested 20 crores for about 49% of some little less than 50.
20 crores at that point in time.
At that point. So we were actually naive investors, and we didn't really understand because you see, there wasn't that much venture capital activity. And we were like, "ठीक है यार, हमने 7 crore में नौकरी बनाई थी. A Policy Bazaar, maybe adjust for inflation, etc. Maybe 20 crores is what it will take to build Policy Bazaar." We were very naive at that time. And Zomato, like I said, was a food listing platform. There used to be a restaurant review and rating company. And we were the only investor in Zomato for the first 3-4 rounds. Right? And Policy Bazaar also was, a new concept.
Would you have invested into Zomato if they came with this concept of food delivery then versus listing?
Unlikely, because see, our thinking was we understand marketplace, we understand how to make buyer-seller meet, we understand listings, we understand aggregation, we understand community, thoda bahut, these kind of things. We actually kept away from making any e-commerce investments. We didn't really get into e-commerce investing because we used to think e-commerce is very capital intensive and it's, transaction, and we don't understand all this. And, we didn't have a very big balance sheet at that time. We were cutting small checks, 1 million, 2 million, 3 million kind of checks. So we stayed away from all this, these capital intensive kind of, we didn't invest in all these, so many other companies which ended up raising billions of dollars. We didn't invest in any of them because we were like in our head, we need to own more and more of these companies if they become, and we want them to get to profitability fast and, those kind of things. And they should have some IP, they should be the businesses we understand. So that was the thought process at that time. Now when Flipkart happened, right, and this...
Which was the first $1 billion check investment.
And smartphones became very sort of big. And, Jio happened at the same time. Suddenly, the Indian internet market took off, and venture capital took off, and valuations took off. And we realized we don't have the money to actually, hang on to our shareholding in these companies. So even Zomato sort of started raising more money because they got into food delivery. Policy Bazaar, launched Paisa Bazaar. They said their ambitions became very large. And we were like, now we can't fund these companies. We don't have the balance sheet to give them 100 million, 50 million, 200 million. So, and we were like, listen, the company comes first. And therefore, we said, listen, let other sort of investors come in. And then we became willy-nilly sort of financial investors in these companies over time.
So hold that thought, because you mentioned, this was an era you talked about no smartphones still in this, and this is really fun fact as it were. So the iPhone was launched in May of 2007. So you're talking a couple of years thereafter is when the smartphone revolution sort of starts taking off. So cut to Hitesh around 2009, 10, say till about 14, 15 or thereabouts. You mentioned this was a phase where you had a lot more activity because suddenly communities of 100 million and all had started happening in India. India was still, Reliance Jio had still not happened. So 4G in its full form really came into effect in September of 2016 and the next 2 years. But that phase saw a lot of capital, also saw a lot of newer ventures coming up and newer categories as well. So e-commerce was a big one that started happening. There was some amount of activity which happened. Fintech continued to be, and this is pre-UPI, so fintech is still not blooming. What was it, both for InfoEdge at the time, and when you look at that landscape for the benefit of the audience, describe to them what that world was, because this was, you were getting into, from shopping, the Indian entrepreneur ecosystem was not just going to like a supermarket to shop, was now beginning to go into malls. You were beginning to understand bigger brands. So give us a little perspective of those 5 years, and then I'll talk about, the post-2016, 17 era.
Yeah. So I'll tell you two things. One, from an operating standpoint, we were undergoing a transformation inside InfoEdge for the simple reason that we understood at that time that phones are going to become very big. Internet penetration was limited till then because PC penetration was limited. Once we realized that phones are going to take off, we were like, we need to move our business to the phone. And a lot of people told us, yaar, ye kaise hoga? How will people input their resume on the phone? How will all this happen? So we had to actually reimagine our UX, our sort of experience for the phone. And that was not easy for us to do because, all the people inside the company were trained on web development, on desktops, and so on and so forth. So Android developers, iPhone developers, all these people were hard to get. Nobody really understood how things would work. Designers were hard to get.
Hard to get for Naukri also, huh?
Yeah, for us also. Every time there is a new technology trend, people are impossible to get. Like, it's very hard to get good AI folks today, right? People who really understand how things are going to work going forward. So it was, inside the company, we struggled for a while to get it right. We were lucky we were able to hire some ace designers from the National Institute of Design and other places. And we transitioned our business from the desktop to the phone. And today, in all the categories we operate in, between 70 to 90% of our business is on the phone, right? So that's a transition we went through inside InfoEdge, and successfully so that was one thing which happened inside InfoEdge. Outside, what was happening was that, like I said, capital became more available, valuation started going up, a brand new VC ecosystem emerged. There were new investors like Tiger and others in India at that time.
And InfoEdge, the parent company, never even during this phase did a QIPO or any, did you raise some external capital?
No, we raised external capital once. And then we raised a second time during COVID. Because every time we are scared, we never used it, right? But in the first time around, we raised it to for 99 acres. Because what started happening was a lot of startups getting funded. So suddenly, for example, in the real estate space, there was massive startup activity. And there were at least 4 funded startups, which we were competing with. And they had raised tons of money. Like housing.com happened at that time. There was $140 million. And here we were inside InfoEdge of the mindset that 7 crore mein Naukri bani thi. 99 को 25 crore we should be able to get it to profitability. And you had this brand new competition in the form of startups, right? A common floor. They raised $60 million. There was a site called Agni, India Homes or something. They raised some 50 million. So suddenly the real estate category, quicker. And
No,
OLX.
and they were incumbents
Right,
as well.
yeah, yeah.
Traditional companies
Right.
like Times in
Correct,
India
correct. So
doing
the
things,
traditional
et
guys
cetera.
were like us, so we had the same mindset. But these new young startups, young founders, very aggressive, capital availability, the game changed. I'm telling you, OLX, Quicker, Housing, Common Floor, these 5-6 companies between them raised about 1.3 or 4 billion dollars. There was a point in time when we were a profitable company generating, let's say 200-300 crores a year of profit, and we were worth less on the public market than startups without revenue.
Yes.
Right? There was a time.
Which now brings me to, so let's go back now 7-8 years, and then I'm really keen to talk a little bit about the future. I think I'm already getting a sign on. So how important the last 8-9 years, when I look at things that have happened, Hitesh, one of the most significant things is this concept around the India stack, where there's been this platformization from identity leading to payments in 2016. And today India is ambitious enough into thinking of democratizing multiple other elements, whether it's ONDC with e-commerce, looking at AI and Bhashini as an example. So the last 7-8 years relate back again to the 100 startups that you have invested into. What have they been some of the choices that you have made? And what has been your advice into them? Because in these last 8 years, we've seen massive growth. We've seen massive amount of liquidity, particularly post-COVID. And we've also seen a very, very big pushback of back to basics and profitability.
Yeah. So listen, the startup scene in India compares to the startup scene anywhere else in the world now, right? I think we have seen startups are now mainstream. The best talent is actually going to startups. There was a point in time when we used to find it impossible to hire people for us because nobody wanted to work for a startup. Today, a lot of people would rather start a company or work for a startup. And therefore, the quality of startups, the quality of entrepreneurs, the areas in which we are seeing startup activity is like crazy. And today, I would say, like till 5-7 years ago also, we were investing mostly in either consumer internet companies or B2B internet companies or standard sort of people who are sort of more innovating around business models and using IT to get a job done. But for the last few years now, we've started investing we are seeing a lot of deep tech activity in this country. A lot of deep tech startups, people doing crazy stuff. People doing stuff of the type you sort of hear US companies and US startups do. Building basic technology, trying to invent new things. There's action in every sector. So earlier it was like just a few sectors. Now there are agri-tech companies, there are fintech companies, there are ed-tech companies, there are, biotech companies, there are space tech companies, there's startup activity across the board. But a few principles don't change. And this has been our advice to startups forever. Listen, you have to be frugal. Please make money from the customer. Don't depend on investor money for a long time, right? It's good to get you started. Don't try and don't burn capital till you get to product market fit. Take capital for growth. It's a long game. To build a company in India takes at least 10-12 years. Don't expect to get anywhere in 2-3 years. So these things don't change. This has been our advice to startups, always.
Last question to you, Hitesh. When you look back, more importantly, the next decade, everything's panning out right. Geopolitically, we're in a great place. The nation is a wonderful place financially. There is political stability. There's almost, every aspect is today you're the darling of international investors. How do you see, what are some of the 2-3 key trends that you see as potentially from an entrepreneurial point of view? Like you mentioned, numerous categories of investments that are happening. A, what are some of these? And B, what could go wrong? What would be your sort of caution, as it were, in some of this activity that's being planned?
So the big thing we worry about, and we've been sort of spending time on, is AI. And AI has been around for a long time, but in the last 2 years, a lot has changed in that world. And we've seen this, play out so many times. Every time there's a new technology or a new trend, you get a big company. So we got Google when search happened. We got, Facebook and Meta when social networking happened. We got Apple when smartphones happened. And now we have NVIDIA and ChatGPT and so on. So this is going to be the story for the next 5, 7, 10 years for sure. The adoption is going to be rapid, as we're already seeing. Billions of dollars of investment into AI startups is already happening as we speak, right? And trillions of value will be created by AI companies in the times to come, and they will be very, very disruptive, right?
And what are headwinds that you see? Because it can't all be hunky-dory. What could be things that people need, entrepreneurs need to be cautious about?
So, entrepreneurs today need to be very careful because, every time there's a new technology, if you're not able to leverage it to your benefit, you can get disrupted very easily, right? So if you're not able to leverage AI like we should be leveraging, and, you get startups who start doing what we are doing or who try and solve the same problem better than us using this new technology, we could easily get disrupted. So incumbents need to be very, very careful. Every time there is a tectonic shift of the type we are seeing, if you're able to leverage it, you take your game to the next level. But you could very easily get hit as well.
Sure.
Yeah.
Well, it's been fascinating speaking with you, Hitesh, and here's to the next 25 years further of InfoEdge, and may you and the numerous entities that you continue to support thrive. Thank you very much for this, and back to you guys. Thank you.
Thank you, Neeraj. Lovely talking to you.